Late last year, it looked like the beaten-down regional banks were finally making a major comeback. After the series of bank failures last spring, this group became absolutely despised.
They know nothing!
As investors worried about their underwater bond portfolios. The regional banks didn't really recover until the last 2 months of the year after long-term interest rates peaked. But they recovered rapidly. From late October through the end of December, the KBW Regional Banking Index, the key index, was up 37%. Although it still finished 2023 down 4%. Unfortunately, the group's going cold again in 2024. Longer-term treasuries have gone down in price and up in yield. But I think this could be just the pullback we've been waiting for. We're in a world where long rates have peaked, and the Fed's likely to cut short rates, albeit not as much as Wall Street might want. That's good news for the regional banks here, especially since the economy's holding up just fine. But you need to be selective, which is why it's worth going over what the regional banks had to say when they reported this week. Things got going slowly with a few reports on Tuesday and Wednesday that were either negative catalysts or non-factors. The Pittsburgh-based PNC Financial reported an okay quarter on Tuesday. I candidly expected more, but their guidance wasn't particularly encouraging. Given that PNC has been a huge winner when the regionals were rallying, the stock pulled back in response to the report, but after a nice gain today, it's roughly flat for the week. While I don't think PNC will hurt you, it's not my favorite. On Wednesday morning, we heard from U.S. Bancorp, which is larger than a regional bank, but a lot smaller than the big money centers. And it gave us a similarly meh set of numbers, quarter paired with a guarded outlook for 2024. I don't want that. Management said they expect positive operating leverage, meaning improved profitability, but not until the second half of the year. U.S. Bancorp stock had rallied 50% from late October to its highs in mid-December, but it's pulled back hard in the new year. Today was actually the first time it was up in 8 sessions. Also Wednesday, we got results from the Providence-based Citizens Financial Group, which popped nearly 2% in response, mostly because people thought it was going to have a terrible quarter. While the results were merely in line with expectations, their outlook for 2024 was much more encouraging. Management said net interest income would bottom in the second quarter and build from there. Citizens gave us more color than most of the regionals, and Wall Street rewarded them for their transparency. If they're right about net interest income bottoming next quarter, I bet the stock can keep running. Now, yesterday we heard from a whole handful of regionals, including what I thought was the best of the week, which is Cramer fave First Horizon, FHN, the Tennessee-based bank that I've been pushing as hard as I can for the past few months, including during last Friday's game plan. The core thesis for First Horizon is simple. Toronto Dominion, big bank in Canada, was willing to buy this company for $25 per share. Then the deal fell through last year because U.S. regulators had issues with the way TD deals with money laundering. Nothing having to do with First Horizon, clean as a whistle. Then the mini banking crisis hit, and First Horizon stock plunged to $9 at its lows last May. As recently as last October, it was still sticking around $10. These guys also operate in strong markets in the Southeast, and I've got tremendous confidence in CEO Brian Jordan, so I've been adamant that the stock's a buy. Then yesterday, First Horizon made me look good by reporting a strong quarter, sent the stock up 5%. Now, some of that was because of lower than expected credit charges, but they also had a successful deposit campaign in the middle of last year that brought in $6 billion in new-to-bank deposits, which they've retained. First Horizon even had a 5% loan growth number in 2023, which is a solid number for a tumultuous year. But the real reason the stock rallied so hard is simple. Management did a great job of communicating, as they always do, that First Horizon will do well, even if the Fed cuts rates more slowly than Wall Street's expecting, which I think is going to be the situation. I am with Jordan. The stock is back up at 14 now. And given that TD is willing to pay $25, I think you should stick with it. Market also liked what we heard from M&T Bank, a major player in the Mid-Atlantic and Truist Financial. They also like that. That's an Atlanta-based bank created by the merger between BB&T and SunTrust. M&T's been one of the higher quality regionals because they avoided the bank portfolio mistakes of their peers. Truist had pretty much messy results, frankly, because they took a $6 billion goodwill impairment charge. I want to know more about that. But when you exclude one-off items, the quarter was strong, and I think it's okay going forward. And one of my pet favorites, Texas Capital Bank shares reported an okay quarter, optimistic full-year forecast. Stock jumped 2.4%. How about today? We got a slew of regional bank earnings reports this morning, ending this week on a pretty positive note. The star of the day was another Cramer fave, the Columbus, Ohio-based Huntington Bank shares, HBAN, which saw its stock jump nearly 4%. Huntington's results were solid, but their guidance for 2024 was excellent. Now, we knew this was going to come. We've had CEO Steve Steinour on. Now, what he said yesterday, I'm going to quote, is the bank is, quote, entering the new year from a position of strength, end quote. And he put forward some pretty confident targets. Huntington expects 2 to 4% loan deposit growth, flat net interest income, and 5 to 7% non non-interest income growth, with only 4.5% non-interest expense growth. Now, if they can hit those goals, I think Huntington stock can move a nice move high. It can make a nice move higher. This is $12.72 stock. It could easily go to 15%. Remember, we care about percentage gains. That was where it was before the mini banking crisis last year, and it's a better bank now than then. You get an 18% gain. I think that's terrific. Then there's also Bank OZK. That's formerly known as the Bank of the Ozarks. These guys found themselves on a list of dangerous banks during last year's crisis period, but the stock stabilized and made a nice recovery at this point, and this quarter didn't hurt its momentum. What else? How about the Alabama-based Regions Financial? That's been a hated bank. It had a nice gain today. Cincinnati-based Fifth Third Bancorp also moved higher in response to its report, albeit to a lesser extent. The only real loser today was Comerica, CMA, which missed its deposits targets and said its interest income was likely to fall this year. That was a disappointment. But even that didn't hurt the stock, which was down for most of the day, but it actually managed to finish in positive territory. That's pretty good for a company that really missed. So here's the bottom line. Okay. They're not fast-moving semiconductor stocks already. But I like what I saw from the regional banks this week. And while I'm still bullish in the group and it can have a big percentage gains coming up, not all regionals are created equal. I continue to like First Horizon and Huntington Bank shares the most. M&T Bank sneaking right up there. And this year, you know what? I'm going to throw in Citizens and, yes, the much maligned Regions Financial. As long as interest rates don't surge higher again, I think all five can work, and it wouldn't be so bad to own something else other than Broadcom and NVIDIA. All right, let's go to Kyle in my home state of New Jersey. Kyle!
Hey, Jim, how you doing, buddy? It's my
doing
birthday.
Well. Doing well, big guy. What are you doing?
The market just hit an all-time high on my birthday after 2 painful years. And I'm
happy birthday! Where's the cake? Where's that? We're going to sing you happy birthday. We'll sing the happy birthday. Happy birthday. We'll cut to you. Okay, go ahead.
Thank you, Jim. I heard during this bear market we were in, I heard somebody say investing in a bull market is practice and investing in a bear market is the Super Bowl. And I made it through my first bear market, and I am so happy. Jim, this stock has been, beating me up bad the last month or so. What do you think about SoFi? Should I
think you buy SoFi. I think Anthony Noto is good. I've liked this stock. We had him on when it was at 4. Then the stock jumped to 11. It's pulled back. I think it's the right level. And, yes, you did get through the bear market. Believe me, a lot of people left. And when you hear those numbers about how many people are still involved, don't believe them. I speak to more people than those guys. Let me tell you, people don't like the market and they don't care for the market and they'd rather be in 5% cash. And you and I know that we can make a lot more money in the market than 5% cash. Now we're going to go to Rex in California. Rex.
Yes, Jim Cramer. This is Rex from Santa Barbara, California.
Oh, I love Santa Monica. I love it.
Santa Barbara.
Oh, Santa Barbara. Hey, we had a great conference in Santa Barbara. It was one of the best conferences I ever had. That's where Anthony Noto line in the sand, $4 SoFi, and then it went to 11. What's going on?
Well, I want to get your opinion on toast. It seems to be a disruptor in the restaurant business.
Well, okay, I'm going to give you the other side of the trade on this. Having been in the restaurant business, these companies are interchangeable. They're all like one and the same. You can pull out Toast, add another guy. It is nothing proprietary, so I'm not going to have you in that, Rex from Santa Barbara. It's not nice enough. Happy birthday to the other fella. This is all just an unbelievable, frankly, it's an unbelievable MI-diversified. Hey, Kyle, New Jersey. Kyle, happy birthday to you, and congratulations on getting through the bear market. All right. I like what I saw from the regional bank reports this week. Yeah, got to be careful of the group, though, because not all regionals are created equal. But as long as interest rates don't surge higher from here, I think my top picks in the space can give you some big percentage gain winners. Much more Mad Money ahead, including Cramerica's favorite game, and that's MI Diversified. Then the Magnificent Seven continues to captivate investors. So why does it seem like other companies are struggling to do the same? I'm surveying the space and sharing some stories that caught my eye during the day. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.